It has been a busy day on Wall Street with investors digesting not only a new China-U.S. plan, but also a federal appeals court ruling that President Trump's tariffs could stay in force for now, and Treasury Secretary Bessent testifying before the House Ways and Means Committee today and soon the Senate. For more on all of this, we've got live team coverage. Let's welcome in Yahoo Finance's Ben Werschkul, Alexis Keenan, and Jennifer Schonberger, all of them joining us right now. Ben, let's start with you. Set the scene for us here as we turn to this, the negotiations that we've been seeing.
Sure thing, Julie. Yeah. So what the White House has agreed to is what they're calling a framework to implement the Geneva Consensus with China. What exactly that means is still being worked out. Trump immediately touted it as a done deal, but Treasury Secretary Scott Bessent told Congress today that they're still in the process of constructing it. Either way, the goal of these talks was essentially to take a few issues off the table so that negotiators in the months ahead could get to bigger issues such as tariffs. The two big issues are export controls and rare earth minerals, basically to reverse some recent backsliding there so they can get back to the tariff issues. The evidence so far here we have is that what they agreed to is a very kind of limited agreement. On the rare earth front, what the Wall Street Journal is reporting today is that China is going to give on this. This was the number one issue for the U.S. side, but at least in the case of U.S. manufacturers, only for 6 months. So sort of permanently off the table, this is very much not. Likewise, on the export control side, there's going to be some give from the U.S., but we don't have clarity yet whether that includes semiconductor design and manufacture. That's been a giant issue for the Chinese and has real national security implications for the U.S. side. As you mentioned at the top, the overall reaction here is that these talks underline that a comprehensive deal is a long ways off, and the details of this one are pretty uncertain. But at least it couldn't have been worse. You know, as one analyst said, at least relations aren't going to worsen over the next few months as talks continue.
Maybe let's start, Doug, with President Trump. You know, took to social media this morning. Doug, he talked about, hey, listen, we've gone U.S. and China. We got a new effort now. We got a new framework, get us back to negotiations. I'm curious what you made of that as a strategist, Doug, and why the lack of kind of reaction in the market? What it would explain that, Doug? Do you think maybe that was priced in?
I think a fair bit of it was priced in, but again, the last 4 months have been pretty crazy. So I think, you know, any announcement around tariffs, and it's great that there's a deal on the table. I think we'll all believe it when we see it. And you saw China came out and said, well, it's only 6 months on those rare earth minerals and whatnot. I think a lot of this is the year is going to be a bumpy ride as the tariff and trade negotiations cycle through the system.
Do you think now, as investors are watching all this unfolding, is the market sort of moving on from tariff headlines to Fed headlines? Where do you think the attention is?
Yeah, I think we're moving on from tariffs to, you know, the Fed. Hopefully by the end of this week, maybe next week, we'll have the tax and budget plan in place. I think those are going to be the next drivers. Again, as we see, you know, I think those are the short-term impactors over the summer. I do think tariffs could still rear their ugly head over the next couple of months, just as oftentimes there's some mercurialness around either our administration or the response from other countries.
What about that Fed meeting next week, Doug? What do you expect to see and hear?
You know, I think what we're hoping to hear is that rates that they've sort of stabilized their outlook around, you know, maybe it's one cut for the year, maybe it's two. But I think for us, we like focusing on the Fed, but, you know, predicting each Fed meeting is not a game we try and play.
All right, let's talk strategy then and some of the names that you're looking at. One of the names that you're looking at that we're focused on after the close of trading is Oracle. That stock's already done quite well over the past year, as Josh pointed out earlier today. So why do you think it's going to continue to have that momentum? Is it just a matter of the AI data center trade continuing and Oracle continuing to be one of the beneficiaries of that?
Yeah, I think Oracle, from our standpoint, Oracle is going to be one of the best beneficiaries of that, and they've benefited a lot this past year. We see their growth, their revenue growth projecting over the next 3 years to be continuing to be really, really strong and growing cloud infrastructure. The other thing is Oracle has such a high recurring revenue base for things that are vital to most companies. So it's hard to cut them out. Now, granted, they're not cheap, and certainly I'm taking a risk here coming and pounding the table on them today of all days. But we think in the long run, Oracle's going to continue to deliver results, especially when compared to some of its other AI peers.
So you like Oracle, Doug. You also like BlackRock. Explain why that one's a buy.
I think BlackRock has done a fantastic job of being incredibly broad. They've got diversification among client base. They are in every geography. They're the largest money manager in the world. They've also done a really good job of building out their product set. So they're now, they've got initiatives to really develop into the private markets as we see private markets starting to take command more and more eyeball and market share. Additionally, they have the world-class risk modeling platform, Aladdin, which is invaluable to both institutional and it's now trickling down to the private wealth managers as well. So we think they have the opportunity to grow. Are they going to be subject to, if the market sells off 20%, are they going to fall? Yes, but in the long run, we think BlackRock is going to remain a market leader in the investment management business.
Doug, appreciate your time and those picks. Thank you, sir.
Thank you.